What's up guys, and welcome back to the channel. Most of you guys have seen me most of the times when I'm trading, particularly my price action trading. Immediately I press buy or sell on my computer, my trade go in profit immediately. That is because I'm able to use what we call sniper entries, all right? Sniper entries. So if a sniper wants to execute its job, it needs to hit that particular target. It must hit that particular target for the job to be completed, all right? It's the same thing in forex trading. It's called sniper entries. Those entries, so long as you're able to pick those entries, your trade go immediately in profit. And there are many advantages to looking for sniper entries in forex trading because it helps you to look for a good risk to reward, to prevent what we call false breakout, to give your trade room to break. So there are a lot of advantages which we're going to cover on this particular video, and I'm going to be able to show you guys how you can be able to look for those sniper entries in forex trading, so that immediately you place your trade, they go in profit without going against you, hitting your stop loss and stuff like that. So if you are ready for us to get into the video, the only thing I want you to do is to smash the like button on the video and let's get started. And if this is your first time watching my content, don't forget to subscribe. All right, so let's just jump here on my screen so that I can be able to show you guys some of these examples. I'm just going to take this trade. If I can come here on my screen, this is the same trade we took last week. If you remember last week, I think a week before last, because last week I caught some flu last week and I wasn't very active. You guys can even hear it from my voice. I'm still recovering. But the week before last, I actually took some. You can see some of the lines are even still on my screen, right? I took most of this live trade, and they were all live trading on the live account. We made more than $5,000. I shared the video. The videos are already on the channel. So I remember this trade on Euro USD. And remember, the purpose of this video is to show you guys what we call sniper entries and how you can be able to spot sniper entries. All right, sniper entries and how you can be able to spot sniper entries. Okay, just look at this trade. Last week we were actually trading. I remember I was actually looking for buy opportunities last week, and at the end of the week, I think by Wednesday, this particular support was broken. You know, it becomes a point in price action trading where a present support can become a resistance, and a resistance can become a support. That's what we call a structure interchange. All right, the structure can be able to interchange. A support can become a resistance, and a resistance can become a support. So this particular support you've seen from here to here was broken somewhere here, and immediately the support was broken. See what happened? The sellers came in and they pushed the market down for almost about 100 pips. So this is what beginner or amateur forex traders will do. They will see that the structure is broken, they will run and they will immediately just buy at this particular level. Can you see this? They will run and they will immediately just sell at this particular level, because now they know, okay, the structure is broken and the market is going down. But this is what they call stop loss hunting. Market makers already know. The market makers already know people like you are going to trade that way. So they know immediately the structure is broken and you see a big ass candle pushing down in the opposite direction, you're going to rush and sell. So they're going to leave the market. They know where your stop loss is going to be. So the market is going to push down. Obviously, if the structure is broken, many people will get in somewhere around here. The market will push down again for almost about 50 or 40 or 30 pips, trigger your stop loss. And you think maybe the market will push down for a couple of people. You think the market wants to go your way, and see what happened. Boom. The market went against you, even past that level, trigger your stop loss, and you say, okay, forex trading is against you, or forex trading is a scam, or you've been cursed. No, you've not been cursed. It's just that you don't know what you are doing. So to be able to look for what we call sniper entries, what will you have done? 90% of the time, I don't trade breakout. This area here is what we call breakout. You seeing the market breaking a particular support and pushing the opposite direction is what we call breakout. And 90% of the times, I don't trade breakouts, because most breakouts are what we call fakies. They are fake breakouts. They are what we call stop loss hunting. Market makers do that most of the time to be able to trigger your stop losses so that you can liquidate your positions. So 90% of the times, I don't trade breakouts. And this is what I instead do to be able to get sniper entries anytime I have breakouts in the market. So the market, I already know that the market has already broken this structure. So what do I do? By that time, if the market is already somewhere here, I do what we call a break and retest. All right, a break and retest, a break and retest. That's what I'm talking of, it and interchanging in the structure. A previous support will become a resistance. You can see this area now is becoming a resistance. So if the current market price is somewhere here, remember this is a 4-hour time frame. Most of the time if I'm trading price action, I want to be able to have that flexibility to do other things, to be working on my robotic strategies, to be working on my fundamental strategies. That's why I see most of the times I do my price action trading on the 4-hour time frame and the daily time frame, because I want to cut the noise. I want to cut all the noise and all the unnecessary business on the 1-minute time frame, the 5-minute time frame, the 15-minute time frame. So this is the 4-hour time frame. And what I will do is I will do what we call a break and a retest anytime the structure is broken. So see, instead of getting into this market somewhere here by selling here and putting my stop loss here at 60 pips, which obviously the market would have triggered my stop loss, what I'll do is I'll instead wait for the market to come back to this particular support, the support that has become a resistance. So that is what they call the break and retest. It break this line and it has to retest the same line. That's what I'm talking about, the break and retest, because it break this line and I'm waiting for it to retest the same line. Break this line, I'm waiting for it to retest the same line. What happened? The market 90% of the time, remember trading is a game of probability. I'm not telling you what is going to happen 100% of the times. I'm telling you what is going to happen at least 90% of the time. 90% of the times, the market pull back and retest that particular structure and retest that particular support which has become a resistance. Immediately the market came back and retest this line. Immediately the market came here and I saw this reversal. Immediately the market just got back to the same line. I would have been looking for a reversal signal. All right, I would have been looking for a signal to trade in the opposite direction, because I know what I call the break and retest has already been respected. And see what happened. The market happened just the same way we planned. I'm already in this trade, and as soon as the market open, we'll be able to see, because I'm already down with almost about 70 pips on this trade. So the market came back to that particular support line, and immediately I saw this bearish engulfing candle. I saw somewhere here. You see, immediately I saw this bearish engulfing candle somewhere here. I saw somewhere here and selling somewhere here. My stop loss was just here. My stop loss was just here at 30 pips. Can you see even the distance? Can you see? Look, can you see the distance? And giving my stop loss is at a very reasonable distance, giving my trade enough room to breathe. What we call enough room to breathe. So immediately my stop loss goes somewhere here. Remember, I saw somewhere here, and my stop loss is going where? It's going at 30 pips. My stop loss is just going somewhere here at 30 pips, because if I know that if the market has to turn against me and get back into this trend, then the original idea behind that trade has already been changed. That's why my stop loss is just here at around 30 pips, and I'm going for a risk to reward of at least 1:3. So my take profit is down here at what? At 90 pips. This is my take profit somewhere here. Can you see this? This is my take profit somewhere here. And look at this. Look at the key level where we should be looking at is this key level. This market has the potential to still drop for almost about 180 pips. Can you see this key level? This key level was here from the 3rd of May. From the 3rd of May, we started having this level being respected many times. So you should expect the market to push right down here. But I'm not waiting for the market to push right down here, right? The main goal for me to get into this trade was to look for a trade which is going to give me a risk to reward of at least 1:3. So I saw somewhere here, my stop loss is somewhere here at 30 pips, and I'm going for 90 pips. This is 90 pips here, and I'm already in profit of 39 pips. You see, I'm already in profit of 39 pips. As soon as the market open, and if this has to go in my favor for 60 pips, I'll take my profit, I'll take my stop loss, and I'll put at break even. At that point in time, I have a free running trade. I have a risk-free trade because my stop loss is already at break even. So I'm doing what we call trailing. I'm already trailing my stop. And I only trail my stop anytime I have 2 arrows. Arrow stands for my risk. So if I'm risking 30 pips, and I'm going for 90 pips, as soon as the market goes on my favor for 60 pips, which is 2 arrow, which is 2 of my risks, I'm going to take my stop loss from the stop loss level, and I'll put at break even. And I keep doing that, Sometimes I used to even go for a risk to reward of about 1:5, 1:6. So I just keep doing that. As soon as the market keeps going 1 arrow, 1 arrow. The market goes again from 60 pips to 90 pips. If I was targeting 1:4, I'll take my stop loss from break even and I'll block in 30 pips profit. If the market has to go again to 5 arrow, I'll take my stop loss from 1 arrow, which is going to be plus 30 pips, and I put on plus 60 pips. So you see, so I give enough room between my entry point and the stop loss, so that I give the market a room to break. Because if my stop loss is too tight, the market will just go against me and do this. Buyers and sellers, a small retracement in the market will take me out before the market even continue going in my intended direction. So you see the importance of sniper entries. My entry that I got somewhere here was what we call the sniper entry. Right? It was what we call the sniper entry. Because see, immediately I entered somewhere here, what happened? The market pushed down immediately. There was a candle that tried pushing up. This is 4-hour time frame. This candle tried pushing up in the opposite direction, but see what happened. The sellers already won the battle. See what happened. Just the next candle pushed down for almost about 30-something pips. That is selling, and the market fall. Buying and the market rise. Selling and the market. So you take a decision and the market obeys immediately. It is because you are able to use what we call sniper entries. And now, that is the first advantage I'm giving you guys about sniper entries. Sniper entries, if you are trading on the trend line, if you are doing trend line trading, or you're trading on support and resistance, for you to be able to get sniper entries, you wait for a break and retest. Don't try to trade structures. Don't try to trade when structures have been broken, because 90% of the times when structures are broken and you are trying to trade, that is what we call false breakout. They false, just from the name, false breakouts. There's what we call stop loss hunting. Market makers will do that to trigger out all your stop losses. Market makers already know where most beginner forex traders or amateurs are going to put their stop losses. So 90% of the time, that kind of structure is just to knock you guys out. So what do? To be able to get what we call sniper entries, you wait for a retest. You wait for a retest of that particular support zone. I used to call it a zone because it's a zone. The price has the ability to still fluctuate in that area. So you wait for a retest of that particular zone. Then you only take your trade on that zone. So in our case, this particular structure was broken here. I didn't just sell at this point in time because the market was broken. I waited for the market to come back to this particular line, to this particular support zone, which has become my resistance, and I always sold somewhere here, because it's like the market break this point and it's going down. Then I wait for the market to come back here and I sold here, and I did exact thing. I sold somewhere here, and see, I'm already down by almost about 40-something pips. My target is somewhere here, and as soon as the market opens, if the market has to push down again for almost about 20 pips, going to 60 pips profit, I'll put my stop loss at breaking, and I keep just doing that until I'm out with a risk to reward of at least 1:3. Let me just show you guys another example of sniper entries. Then I'll also give you guys some advantages and some tips that will help you to be able to always have sniper entry. Look at this gold trade. This gold trade is the same stock, is the same trade we've been monitoring since the 9th of August 2021. Can you see this? Since the 9th of August 2021. You see, when you start trading like a profitable forex trader, you start having like a history of your trading. You start having like a history of all your trade. I remember I started trading this particular channel. This is a daily time frame. This particular up channel, or this particular uptrend channel, right from the 9th of August until now. You see, the market is still respecting that particular channel. So you just imagine the money I've made only on this particular channel alone. So this channel got here, I think this was around the 12th of May, and we got here. I actually took this trade and I was just targeting 400 and something pips, and I'm already out of that particular trade. So as soon as the market gets to this particular level, you can see we are already in between the channel. We are already in between this particular channel, right? So you can be asking yourself a question like, should I buy here or should I sell here? Since the market is already in between that particular channel, that is a big question for you to ask yourself, because you might make a mistake and you are instead buying here when the market is going to come back to retest the particular support zone. You might make a mistake and you are selling here when the market is going to continue going up. You see, so at this level, at this point in time, we don't know what the market is going to do next, but obviously we have a plan. As a forex trader, nobody knows what is going to happen in the Forex market the next minute, the next hour, the next day, the next month. But we have meticulous plans along the way. We have plans that will be able to help us. Whatsoever direction the market is going to take, we're going to be ready. So see what, to be able to use sniper entries, this is what I want you to do, or this is what you would have done, all right? So on this particular point in time, you instead wait for the market to come back. This is not a situation where I'm talking about a break and retest, because this is not a situation where the structure has been broken. There's no structure which has been broken here. So we are just waiting for the market to come back to our support zone. Remember, I'm calling it support zone, not just a line. If it's a line, you're going to have a lot of false breakouts. So most of the time, I'll wait for the market to come back. And test my zone. So long as the market comes back here and test my zone, I'll always be looking for a buy signal somewhere here. See the reasons why looking for a buy signal somewhere here is the reason why I make money in Forex trading all the times. Whether the market is going up or down, or whether I'm having many losers or many winners, I still make money. So look at this. Let me just show you guys this example, right? Look at this example somewhere here. I got into the trade somewhere here, and just pushing the market from here to here. Let me show you again another example. So look at this typical example that is going to help you to be able to look for sniper entries, whether you are trading a break and retest or in between a structure. So to be able to get a sniper entries, what will I do? I'll wait for the market to come back here at my support, then I'll only buy here. If I'm buying here, my stop loss is going to go somewhere here at around 200 pips, and I'm going to be targeting up here at around 1000 pips or even 800 pips. You see, so I'm risking 200 pips because reasonably I want to place my stop loss in an area where the market can have room to breathe, right? So if I'm placing my stop loss at an area where the market has room to breathe, then my take profit will only go up here at around 800 pips. In that case, I'm risking what? I'm risking 200 pips to go for 800 pips. 200 pips to go for 800 pips. That is a risk to reward of at least 1:4. A risk to reward of 1:4. If I'm trading and I'm having a risk to reward of 1:4, out of 10 trades, I just need to have 3 right. Just 3 trades right. Out of 10 trades, I have 7. All the other 7 trades are losers. Just 3 are winners. I'll still be making millions in Forex trading. That is the power of risk to reward. And being able to work with sniper entries will give you a good risk to reward. Because just in this other situation, let's just assume even if the market has to turn here and continue going up, and I have to buy somewhere here, remember my stop loss is going to go down here at around 500 pips. So I'm going to be risking 500 pips to go for about 700 pips. That is a risk to reward of about 1:1 even, or about 1:1.5, which is not my recommendation. My recommended risk to reward in trading must be at least 1:3. All right, so to be able to look for that good risk to reward, you wait for that sniper entries. There are a lot of opportunities in the Forex market, so you only take the best. You can't even trade all the opportunities. So the moment we are on go looking for an opportunity, go to Great Britain Pound USD, go to USD CAD, you're going to see many opportunities. So you only look for those best opportunities. You only look for those trade with sniper entries. So you see the advantage. So one advantage of working with sniper entries is it gives you a good risk to reward. Another important advantage, or another very vital advantage of working with a good sniper entry, it allows your trade, it gives your trade room to breathe. Because if I want to enter in this trade somewhere here without using sniper entries, obviously my stop loss is going to be very tight somewhere here. And even if the market at the end of the day will be in an uptrend, or even if the market at the end of the day will go in my intended direction of going in an uptrend, it must have already triggered me out. It must have already knocked me out. So you see, so I suffocated my trade. I didn't give my trade room to breathe. But if you're working with a good sniper entry, where you waited for the market to come back at that sniper point, you'll be putting your stop loss at a reasonable distance that will give your trade room to breathe. So another very big advantage of using sniper entries is it gives your trade room to breathe. Another important reason for using sniper entries in Forex trading is it prevents false breakout and also prevents stop loss hunting. All right, it prevents false breakout, because in forex trading there's going to be a lot of false breakout where you see structure is broken and you think, okay, the market is going to be going down since this structure is already broken, and you see what, the market turns in the opposite direction. That was just a false breakout. That was just what we call stop loss hunting. Market makers know where your stop loss is going to be. So you, instead knowing how to use sniper, support and resistance, is going to prevent your trade from suffering from false breakout and from also suffering from stop loss hunting. So these are the advantages you're going to have when you're able to trade with sniper, support and resistance, or when you're able to have a sniper entries in forex trading, because at that point in time you're trading a lot of confidence, because firstly, you know, you've given your trade room to breathe, you are able to have a high risk to reward. You've also prevent yourself from having false breakout and stop loss hunting. At the end of the day, you know, trading, or you're going to see that trading is not a mixed trade. You place your trade and it goes in your favor. You press a buy and the trade immediately goes in the buy direction. You press a sell and the trade immediately goes in the sell direction. Thank you guys so much for watching to this point in time. Make sure you check the videos that are going to be coming at the end of the screen, because all the videos are related to the same topic. And if you're watching my video and you haven't subscribed, make sure you smash the subscribe button below to subscribe to the channel. If you want to use the same broker I use, make sure you check the link on the video description. You want to join my inner circle, you want to join my mentee, check out Godlove University and you'll be able to join my inner circle. You'll be able to join my mentees. Thank you guys so much for watching. Make sure whatsoever you're up for today must be profitable, and I will see you guys on the next video. Peace.